Warning, if you hold Nvidia stock, this will shock you. Here's the hidden truth. Nvidia is the biggest AI infrastructure company on earth, but Wall Street still treats it like a chip stock in a checklist. Wall Street thinks they understand Nvidia. They're wrong. Watch all the way to the end to see why. Whether you're sitting on massive gains, worried about the so-called AI bubble, or trying to decide if it's too late to buy at a 3.5 trillion valuation, what I'm about to show you will completely change how you see this company. Because here's the thing, everyone's looking at Nvidia's chip sales, but there's a massive infrastructure empire hidden inside their earnings that almost nobody is measuring correctly. And once you see it, you'll understand why the bears have it completely backwards. If we have not met, I am Hank. I invest in AI and tech stocks. Here is my view on Nvidia. So in this video, I'm breaking down the Nvidia truth that Wall Street keeps missing, the data that contradicts everything you're hearing on CNBC, and the one number that explains why this company could still be massively undervalued even at 3.5 trillion. Your time is valuable, so here's exactly what we're covering. The bubble debate everyone's obsessed with and why both sides are wrong, the rivals and bears and their biggest contradictions, the 90% revenue truth most people scroll past, the hidden infrastructure empire inside Nvidia that changes everything, and the payoff insight that will shift how you see this stock forever. All right, let's get into it. Section 1, the bubble debate. Everyone is obsessed with. Turn on financial news right now and you'll hear the same debate on repeat. Is Nvidia in a bubble? Bulls say AI is the future. Bears say valuations are insane. And retail investors are stuck in the middle, paralyzed by fear of buying the top. But here's what makes this debate so frustrating. Both sides are asking the wrong question. The bubble debate focuses on one thing: price. Is Nvidia's $3.5 trillion market cap justified? Are we in 1999 dot-com territory? Will this crash like crypto in 2022? And I get it. When a company grows this fast, skepticism makes sense. Nvidia's stock is up over 700% in the last 2 years. That's not normal. That's generational. But here's the problem with the bubble argument. It ignores what Nvidia actually does. It treats them like they're selling Beanie Babies or NFTs. It assumes there's no real value being created. Let me show you why that's insane. Nvidia just reported $35.1 billion in revenue last quarter. That's up 94% year over year. Not 9%, not 19%, 94%. The biggest company on earth is nearly doubling revenue year after year. And here's the kicker. Earnings per share grew even faster, up 103%. So not only are they growing, they're becoming more profitable as they scale. Now compare that to the actual dot-com bubble. In 1999, companies like Pets.com were valued at hundreds of millions with almost zero revenue. They were burning cash, losing money, and betting on future potential. Nvidia generated $19.3 billion in net income last quarter. That's real profit. In 90 days, they made more profit than most Fortune 500 companies make in a year. So the bubble debate? It's lazy analysis. It's what people say when they don't understand the fundamentals. But the bears aren't totally wrong either, because there is a dangerous assumption baked into Nvidia's valuation that AI demand will keep growing forever, that hyperscalers like Microsoft, Google, and Amazon will keep spending $200 billion a year on data centers. And that's the question we actually need to answer. Not, is this a bubble? But is the AI infrastructure build-out sustainable? And to answer that, we need to look at who's betting against Nvidia and what they're missing. Section 2, the rivals, the bears, the big contradictions. Let's talk about the competition, because this is where things get really interesting. AMD, Intel, Google, Amazon, Microsoft, they're all trying to build chips that compete with Nvidia. And the bears love this narrative. Nvidia's monopoly won't last, they say. Custom chips will eat their lunch. And on paper, that makes sense. If Google can build its own AI chips for cheaper, why would they keep paying Nvidia's premium prices? But here's the massive contradiction nobody talks about. These same companies trying to compete with Nvidia are also Nvidia's biggest customers. and their orders keep increasing. Microsoft just announced they're spending $80 billion on AI infrastructure in 2025. Google's capital expenditures hit $53 billion last year. Amazon's not far behind, and the majority of that spending, Nvidia GPUs. So let me get this straight. These companies are developing internal chips to reduce dependence on Nvidia, but they're simultaneously placing the largest GPU orders in history. That doesn't sound like a company losing its moat. That sounds like demand so insane that even building your own chips can't keep up. And here's why. Nvidia isn't just selling chips. They're selling an entire ecosystem. CUDA, their software platform, has 20 years of development and 4 million developers. Every AI researcher, every data scientist, every machine learning engineer learned on CUDA. That's not something AMD can replicate by launching a faster chip. That's decades of network effects and switching costs. But the contradiction goes even deeper. Let me show you something wild. The bears say AI spending will slow down because companies aren't seeing ROI yet. Where's the revenue from AI? They ask. Where are the killer apps? But then you look at the data and companies using AI are seeing massive returns. ChatGPT hit 100 million users faster than any product in history. Claude, Gemini, and other AI assistants are generating billions in revenue. Microsoft's Copilot is adding $30 per user per month to their enterprise contracts. So which is it? Is AI overhyped with no ROI, or is it generating billions and growing faster than social media did? The bears can't have it both ways. And when you actually dig into the numbers, the answer becomes crystal clear. But to understand it, we need to look at where Nvidia's revenue actually comes from. Section 3, the 90% revenue truth most people scroll past. Here's a number that should terrify Nvidia's competition, 90%. That's how much of Nvidia's revenue comes from their data center business. Not gaming, not automotive, not professional visualization. Data centers. Last quarter, Nvidia's data center segment generated $30.8 billion in revenue. That's up 112% from last year. Let me put that in perspective. Nvidia's data center business alone is now bigger than Intel's entire company. And while everyone's focused on GPU sales, they're missing 3 massive points that explain why this isn't slowing down. First, China. Nvidia's current numbers include 0 revenue from China. None. The export restrictions cut them off from the world's second largest AI market, and their guidance assumes it stays at 0. Now, I'm not saying those restrictions will lift tomorrow, but if they ever do, that's pure upside. We're talking about tens of billions in additional annual revenue that isn't priced in. Second, Blackwell is just getting started. Nvidia's new architecture launched in late 2024, and it's still ramping production. The full revenue impact won't hit until mid-2025. And this is where Wall Street makes their biggest mistake. They look at last quarter's numbers and assume that's the peak. But Blackwell delivers 4 to 5 times better performance per watt than the previous generation. That means data centers can generate 10 times more revenue per chip. So when Blackwell fully ramps, we're not talking about incremental growth. We're talking about a step function change in Nvidia's revenue potential. And third, and this is the big one that nobody talks about, these data center numbers don't include the full picture of what Nvidia actually sells. See, when you hear Nvidia sold $30 billion in data center products, most people think they sold $30 billion worth of GPUs. Wrong. $8.2 billion of that revenue came from networking, not chips, networking infrastructure, switches, cables, interconnects, and data processing units. And that networking business, it grew 150% year over year. It's now the largest networking business in the world by quarterly revenue, bigger than Cisco's data center networking, bigger than Arista's cloud networking. And here's what makes this terrifying for competitors. Nvidia's networking revenue is growing faster than their GPU revenue. Why? Because AI workloads don't run on individual chips. They run on thousands of chips working together. And to make that happen, you need custom networking architecture that Nvidia designed specifically for AI. This is the part that AMD, Intel, and the custom chip makers can't replicate. Even if they build a chip that matches Nvidia's performance, they don't have the networking ecosystem to make it work at scale. But even that isn't the full story. Because inside Nvidia's earnings, there's an infrastructure empire that most investors completely overlook. Section 4, the hidden infrastructure empire inside Nvidia that no one measures correctly. Let me show you something that changed how I see Nvidia forever. Everyone knows Nvidia makes GPUs. What they don't realize is that Nvidia has become an infrastructure company. Here's what I mean. Nvidia isn't just selling individual chips anymore. They're selling full-stack AI factories. Complete systems that include GPUs, CPUs, networking, cooling, power management, and software. Their new product isn't a chip, it's a rack. The GB200 NVL72 is a 72 GPU system connected through custom networking that acts like one giant supercomputer. And data centers aren't buying chips and figuring out how to connect them. They're buying these pre-integrated systems because Nvidia already solved all the hard problems. This is the invisible empire inside their earnings. Let me break down what that actually includes. First, there's the networking business we talked about. 8.2 billion last quarter, growing 150% year over year. That includes Spectrum X Ethernet, Quantum InfiniBand, and NVLink interconnects. Then there's the CPU business that nobody tracks. Nvidia's Grace CPUs are designed specifically for AI workloads, and they're being bundled with GPUs in these full-stack systems. Wall Street doesn't break this out separately, but it's billions in hidden revenue. Then there's the DPU business, data processing units. These chips handle networking, security, and storage, offloading work from the main GPUs. Bluefield DPUs are becoming standard in AI data centers, and that's another multi-billion-dollar revenue stream inside the data center number. And then there's the software. Nvidia's CUDA platform is free, but their enterprise software stack isn't. AI Enterprise, Omniverse, Drive for autonomous vehicles. These are high-margin software products that create sticky, recurring revenue. Add it all up, and Nvidia isn't a chip company anymore. They're a full-stack AI infrastructure company, and the market is still valuing them like they just sell GPUs. But here's where this gets really interesting, because the reason Nvidia built this full-stack empire isn't just about selling more products. It's about solving a problem that unlocks the entire AI revolution. And when you understand this problem and how Nvidia solved it, everything about their valuation starts to make sense. Section 5, the payoff that changes how you see Nvidia forever. Alright, here's the insight that puts everything together. The entire AI market is driven by one metric, cost per token. That's it. That's the whole game. How cheaply can you generate AI responses? Because when the cost per token drops, entirely new use cases become profitable. Right now, using AI for customer service is expensive. Using AI to analyze every medical scan is expensive. Using AI to personalize every student's education is expensive. But when the cost per token drops by 10x, all of those use cases become viable. And when it drops by 100x, AI becomes ubiquitous. It's embedded in every app, every device, every service. And here's the kicker. Nvidia's full-stack infrastructure is the only thing that can drive costs down that fast. Their new Blackwell systems reduce the cost per token from 70 cents per million tokens on the old architecture to just 7 cents on the new one. That's a 10x reduction in costs. And that's not about selling more chips. That's about unlocking exponentially more demand. There's a concept in economics called price elasticity of demand. When the price of something drops, demand increases by even more. We saw this with electricity. When it got cheap enough, every home switched from candles and gas lighting. And then demand exploded because people found thousands of new uses for electricity. AI is following the exact same path. A 10x cost reduction doesn't just mean 10x more usage. It means 50x, 100x, or even 1000x more usage as new applications become economically viable. And Nvidia's infrastructure empire, the GPUs, the networking, the CPUs, the software, is what makes that cost reduction possible. So when bears say Nvidia is overvalued, they're missing the forest for the trees. They're looking at today's revenue and today's chip sales. They're not seeing the exponential demand curve that gets unlocked when costs drop. That's why I think Nvidia could be the world's first $10 trillion company, not because of hype, not because of a bubble, but because they're the infrastructure layer for the biggest technological shift since the internet. Look, I'm not saying Nvidia will go up in a straight line. There will be pullbacks, there will be quarters that disappoint, there will be new competitors, but the fundamentals are undeniable. 94% revenue growth, 90% of revenue from data centers. A hidden infrastructure empire growing faster than the core GPU business, and a roadmap that drives AI costs down by 10x or more. That's why Nvidia stays near the top of my portfolio. That's why I'm still buying at a 3.5 trillion valuation. And that's why I think the bears are about to look really, really stupid. If this video gave you a new perspective on Nvidia, hit that like button and subscribe. Drop a comment and let me know. Are you buying Nvidia at these levels, or are you waiting for a pullback? And if you want to see what other stocks I'm buying to build generational wealth, check out the video on the screen. Thanks for watching. Until next time, the best investment you can make is in you.